Are inflation worries behind us? I'm Lisa Bernhard with Reuters, and one person who's not so sure they are behind us is Shana Orczyk Sissel of Bonrian Capital Management. All right, Shana, you say that you're hesitant to get too excited about the April inflation reports that showed price gains slowing. Why is that?
Well, first, it's just 1 month. We had several months that was hotter than expected. And there are three major inflation pieces of data that come out: the PPI, the PCI, and the CPI. And the PCI is the one that the Fed kind of focuses on. It's the one that was the most impressive. It hit its lowest levels in 3 years. But the PPI came in hotter than expected. And CPI, which is the one that most of us experience, which is X food and energy, came in okay. But if you put food and energy back in, which, let's be honest, that's what affects the average person, it actually was hotter than expected. So if you look under the hood, there's some reasons to be optimistic, but it's just 1 month. And there's other things at play right now that suggest to me that it might just be 1 month.
When it comes to the Fed lowering rates, there's also two other factors here, right? Employment and the Fed's balance sheet.
Yes, that's correct. So from an employment perspective, you want to see some stability in the labor markets because wage inflation is a concern because that feeds through to service inflation. And we haven't quite seen that yet. And we've had some volatility in the most recent labor market data points. On the other hand, the balance sheet, right? So we are very, very, very focused on Fed's cutting rates and what does that mean for interest rates and all of that. But what we are not paying attention to is what is happening behind the scenes with the Fed balance sheet. So the Fed had been selling from its balance sheet and reducing the amount on its balance sheet for quite some time. It was about $60 billion a month. About a month ago, the Treasury and the Fed came together and decided that they were going to reduce the amount they were selling from $60 billion a month to $25 billion a month, which means that there's more liquidity in the system because they're not selling as much. And that is something worth considering, again, on how that affects inflation. That is a liquidity tailwind, not a headwind.
So a lot of people are saying that the Fed perhaps might not make any moves as we get closer to the election. How do you see this election actually in other ways affecting the U.S. economy?
You're seeing it in fiscal policy. So the Biden administration has announced several new programs that are definitely aimed at the voters. First, the expansion of the student loan forgiveness program. Second, the GSEs are now able to buy second mortgages, which is meant to try to encourage homeowners to tap into the vast amount of home equity that they've accumulated over the last few years. So those two things are stimulative. We also have the CHIPS Act and infrastructure spending is set to spend about $100 billion on infrastructure improvements between now and the end of the year. All three of those things are stimulative. Again, I think these things play into inflation. I think that we should not get too excited about the April inflation number for that reason. And they're very much politically related to the election in the fall. And I expect to see more like that in the coming months.
I have to talk to you about Nvidia, which of course reports earnings tomorrow. And it was almost 1 year ago to the day that it kicked off this series of blockbuster earnings that has really powered the market. Talk us through what we've seen in that year, beginning with how much the market cap has grown.
I think people would be blown away by how much the market cap has grown in Nvidia in the last year. So the first blockbuster earnings report that they had was the Thursday before Memorial Day last year. So that was I believe the 23rd of May last year. At that time, their market cap was just over $750 billion. Today, it is $2.3 trillion. It has increased its market cap by $1.5 trillion in the last 12 months, which is unbelievable. It is now the third largest company in the S&P 500. And if that isn't impressive to anybody, I don't know what is. And they've done it and continue to have these blockbuster earnings reports. Year over year, they've seen improvement in their sales by well over 200%. And their margins are extremely impressive, over 75%. I think it's 77 is what their profit margins are, and growing. So the question here is, will they have another blockbuster earnings report? And I believe they will. We saw some really interesting announcements from Microsoft regarding AI, and there's competition here with Google, and there's lots of things going on in AI, and that is a beneficiary. Nvidia is a beneficiary of that. But we're getting really close to that $1,000 per share number. And psychologically, people fixate on numbers like that. So will we see some selling if the stock does reach that $1,000 per share market price? It'll be interesting to see how investor behavior reacts just to that psychological milestone.